Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. Well, we've had 3 days on a trot, all three indices, practically all 3 days, reaching out to new highs. The bulls have never had it so good in a long time. But today, perhaps, we have to pay a little attention to the global clouds that are gathering. Yesterday, we were clearly the outlier. Asia, Europe, US, all of them ending in the red. But Indian market stood out with all indices at all-time highs. But today, we may have to pause and look at the global scene. The Bank of Japan and the US Fed are meeting, and both those meetings will be on investors' mind. I'm not even coming to the MPC over here, which I think is well factored. The BOJ, after a long hiatus, is expected that it could do some tweaks to its policy to steepen the curve and make it easier for the banking system in Japan. We've seen a flight of dollars, therefore, to the US. US yields are also pretty high now, pretty close to 3% again, though we have seen 3.1 and we've come back. But nevertheless, at 4.1% GDP, what might the Fed say, even if it didn't do anything in the policy that's in the meeting that's underway? These are clouds, and in the midst of all this, you have a FANG stocks that are receding day after day. There is, well, you can't call it panic, but certainly there is a bit of letting out of air. Can we be immune to all this yet again? What is our record? We had extraordinary, better than expected results from Bank of Baroda, ICICI, that kept the entire banking system propped up, the corporate lenders. But can we repeat that performance? Axis numbers were good, but they were mixed. There was an increase in the BB minus and below category of bad loans. So that's at best mixed, and Axis is already up about 11% in July. So has it factored in that? Tech Mahindra results again mixed, largely in line, maybe a surprise here or there. Avenue Supermart was super, but then the price already is very tall, and Indigo was a disaster. So it's not necessary that today there is anything to pole vault the indices yet another day. Do we have enough steam for a 4th day running?
Yeah, of course, the market has been moving upwards, so it's been climbing every wall of worry. But I take your point entirely about what's happening with the FANG stocks, because I think it's a 3rd day running now that the Nasdaq has been falling. And, it's lost 5% in 3 trading sessions. So it's a rather big fall. Cautious commentary from a lot of these heavyweights, disappointing earnings from some of them. That's something that you need to take notice of. And, in terms of earnings, Lata, you spoke about Avenue Supermarts, Axis Bank, etc. A lot of the other non-index large caps also did well yesterday, whether it's Oberoi Realty, Gujarat Gas, GSPL. So we've had a good spate of numbers as well. You think that could keep the markets buoyant?
Well, I thought some of it is in the price. Were we prepared for an Indigo kind of disaster? I don't think. Well, Gujarat Gas and GSPL are more in line rather than, outstanding. And they are small companies. They don't represent a sector. Banks is a different category. Corporate lenders were an ignored lot, and the valuation difference between corporate lenders and retail lenders had expanded considerably. But now, the corporate lenders seem to have put their worst behind them, though the pain will linger through FY19. I mean, no one expects access to, there are problems with lending growth. It's only 14%. Even ICICI didn't show very good lending growth.
Yeah.
That's because they only want to lend to AAA companies. They don't want their corporate lending book. They don't want to expand after being, bitten for the last 3 years. Loan growth is not that spectacular. And therefore, I would think that a lot of the good work is reflected in the prices. Now the markets will wait to see when the growth returns and whether the promise of the pain being over is kept in subsequent quarters.
Yeah.
So my own sense is, results have been good, but that's why the markets are at all-time highs. Yeah. Is there enough spunk in the numbers now to keep on pushing it further? I'm becoming a little skeptical.
Okay, well, let's see what our wise experts have to say as we head into trade this morning. Lots of numbers today as well. But we'll kickstart with Sakti Siva of Credit Suisse. She says foreigners were net buyers of emerging Asia, ex-Malaysia, ex-China on 9 out of the 12 last days, with net buying of $1.38 billion. She says while almost all the markets in emerging Asia are associated with net foreign buying over the past 12 days, Taiwan as the biggest recipient with net foreign buying of almost $0.9 billion. Sakti says Taiwan is followed by India with a net foreign buying of $185 million, then Korea and followed by Indonesia.
All right, so that's not forecasting much from Sakti. Let's get you money market views. Bhaskar Panda of HDFC Bank says China-US trade tensions seem to be simmering again and crude prices are inching up slowly. That's important to note. Hence, he says we might not see much recovery in the INR against the dollar. Expects the USD-INR pair to trade in a range of 68.65, 68.85 for the day. I think that's another point we have to note, that crude has snaked up to $75.
Okay, well, Bhaskar Panda talks also about the bond market. He says the expectations of a rate hike in the next MPC meeting is building up, but the bond markets have been quiet. Today, he says we might see the 10-year benchmark bond yield trade in a range of 7.78 to 7.82%.
Well, let's go over to Mangalam to get a synopsis of the worldview.
Well, indeed, the global clouds are densifying as we speak, and this week is a lot of uncertainty. A lot of central banks meet. Today is the Bank of Japan meeting. Tomorrow is Reserve Bank and US Federal Reserve, of course, and on Thursday we have Bank of England. So there is a bit of wait and watch out there, but some sell-off seen in the FANG stocks, which were at record highs. For the third day running, we saw some cuts. Facebook, Amazon, Netflix, Alphabet, Google parent, which is falling anywhere between 2 to 6%. That has meant that the Wall Street declined. Apart from just Dow Jones, Nasdaq was the big underperformer there. Over the last 3 days, it has lost about 4%. That also means that fear has spiked. For the second day running, we've seen the CBOE VIX move higher. In the last 2 days, this index has moved higher by about 16-odd%. There are some trade worries as well. Reuters has reported Canada, EU, Japan, Mexico and South Korea will meet with regards to threats made by Donald Trump on US auto tariffs. 10-year bond closer to that 3% mark. So that is another cue that we have to keep on our table. The European indices, though, they ended lower, and we saw Heineken stocks end lower as well. In Asia, most of them are in the red. The SGX Nifty mildly flat.
Okay, thank you very much for that worldview. Let's try and see if we have to worry about the central bankers meeting and we have to worry about the FANG stocks losing some air. Ken Peng, Asia Pacific investment strategist at Citi Private Bank, joins us on the phone line. Ken, good morning and thank you very much for joining us. Well, first up, something that's closer to where you live, the BOJ meeting. It would usually have been pedestrian and nobody would have really watched out too much, not stock investors. But this time around, we are seeing some bit of worries. Would you worry, and why?
Yes, I will actually. This is pretty important for Japan because they've the BOJ's yield control policies have kind of reduced bank profitability and also reduced liquidity in the Japanese capital market. So they need to do something. But what it is, I think they may show us what their plans are, but the actual policy might not change today. So if that's if that's the case, then I think the market's probably already folded in quite a lot of the potential changes. In any case, I don't think the BOJ is going to end its quantitative easing program prematurely. So I think if we do see a dip in dollar yen, I think this probably would be a interesting buying opportunity.
Okay, an interesting buy opportunity. Ken, hi, good morning. What about the Fed meeting? The expectation is that the Fed will issue a statement talking about the stronger growth and the fact that they're closer to meeting their inflation target of 2%, thereby sending a signal that more rate hikes are coming. If that happens, then do you think the markets could get spooked, or is that all in the price?
That's funny because among the 4 central bank meetings this week, the Fed is probably the least interesting. So we have the U.S. economy is doing well, but it's been doing well for a while, and it's the expectations and reality seems to be fairly evenly matched. So I don't think the Fed is really in a hurry to become more hawkish, and there certainly aren't really any reasons to become more dovish. So it's actually pretty pedestrian, like you said before, for the Fed this time. I'm not looking for any fireworks really.
Okay, well, Jamie Dimon has worried, speaking to CNBC US, that he worries about the rolling back of QE and whether investors are prepared for it. But okay, if that doesn't worry you, does the fall in the FANG stocks, fall in the technology stocks rather rapidly over the last 3 days worry you? Can it trigger a kind of global sell-off?
So I think for the longest time we've had these FANG stocks and also just other tech, sustainable growth, sustainable high growth type of stocks becoming very, very popular in everybody's portfolio. So there's probably a bit of over-positioning there, and I think, after the, Facebook, Twitter, the series of bad news, I think people are adjusting those positions. However, I think it's, markets are not really, I think this is a positioning adjustment. It does not change the longer-term prospects for tech. I would still be, tech, I think tech investors will still be coming back once the discounts deep enough.
Okay. Just one final word from your end on how you're approaching emerging markets like India now. What is the rationale that foreign investors have? Because some amount of appetite had reduced over the last 6 months. How are investors positioned now with respect to India?
India is really tricky in my mind because it's kind of hard to wrap my head around, because it has been the strongest performing EM Asia equity market that had the worst performing currency, and that normally don't come hand in hand with each other. So I think there are some technical reasons for that, some regulatory changes. But I think we are going into a pretty dicey, well, not dicey, we're going into a pretty busy political season in the coming, by the end of this year, and I think we should be taking a more cautious stance on India.
Well, your point is well taken. We have seen a lot of domestic inflows into mutual funds and those coming into equity markets. It's kind of an evolving secular savings moving from probably bank fixed deposits into mutual funds, and that's clearly replaced foreign funds, which is why you have dollar weakness accompanied by equity strength. But it's also accompanied by improvement in earnings. We have had one of the best earnings quarters, and now we have started to see even corporate lenders who were hurt by NPA starting to improve. Has that caught your eye at all?
Yeah, certainly. So we had a series of downgrades in the first half of the year, but that stabilized and started to come back. I think that's definitely a very good sign. And I think the market is reflecting that that stabilization in earnings estimates. So I think if this continues, certainly I think I can see stronger performance. But again, it's a fairly expensive market. Yeah.
No. That was my short point. India has been an outlier. Can it continue to be?
No, well, yeah. So if the earnings revision continue to be positive, I think that's possible. Yeah.
Okay. All right, Ken.
And just your thoughts on crude as well, because the last time we spoke, you had increased your bearish views because of the way crude was moving. But now Brent has stabilized around $75 a barrel. You think that concern is out of the way?
So I think the issue here is so the potential losses in supply from, say, Iran or other geopolitical hotspots is probably going to be sufficiently made up by additional supply from Russia and Saudi Arabia. And because of the need for the U.S. Midterm elections, I think the U.S. may actually take it easy on Iran before that election. So I don't really see any major reasons for oil to rally further. But then again, the supply and demand relationship is pretty tight. Yeah, so I think we're in it.
As I said, we have 11,300 was conquered yesterday. Looks like today we could start with consolidation, but then I assure you there are plenty of stocks that will move the market. So let's talk about all of them. Our research team is right here with CNBC TV18's list of top 10 stocks for the day. We have to start with Axis Bank because of the numbers yesterday. Abhishek, tell us more.
Well, Sonia, the non-watchlist slippage or the standard book slippage at 520 crore is the lowest in last 3 to 4 years for the bank. So the total slippage is also declined by 74% on a quarter-on-quarter basis. In absolute value, due to stronger recovery and falling slippages, the gross NPA came down by 4.6% quarter-on-quarter. In ratio-wise, gross NPA declined by 25 basis points quarter-on-quarter to about 6.52%. The loan growth, however, at 14.4% 8% is the lowest in last 4 quarters. But if you look at the NII growth, that has been the strongest in 8 quarters at close to 12%. The decline in net interest margin over the last 8 quarters has been arrested, and the net interest margin came in at 3.46 versus 3.33%.
Okay, all that is taken. I would still worry that the BB and below book has risen fairly sharply, and that might be a spot of bother since the stock. Look at the way it has risen in the past few days. Well, Reema, Tech Mahindra?
Lata, the numbers were better than very subdued expectations, and even the management commentary on the telecom outlook was positive. So in that sense, I expect the stock to do well, considering that it declined by close to about 8% in the last 1 month. So constant currency growth of about 0.3%. Street was expecting a decline. Dollar revenues come down by 1.6%. A margin decline of 80 basis points, also better than street expectations. Onto the telecom business, 40% of their overall business, that continues to be under pressure. So its revenues have fallen by 6.5% over there, and it's the enterprise business or the non-telecom business which is driving growth. But that said, the outlook is promising. While the deal wins are low on a quarter-on-quarter basis, particularly for telecom, the company has indicated that they have signed a letter of intent or LOI for more than $200 million worth of deal in the month of July. So that gives them a sense that telecom perhaps is rebounding.
Okay, thanks a lot for that. So Tech Mahindra probably better than expected, but for the last couple of days, the IT index has been the underperformer because banks have the upper hand. So the results are coming at a time when IT is not the most favored sector. Sonia, Interglobe.
Well, the numbers were very weak. The stock has been reflecting that it's at a 52-week low. But, you know, there's just no pricing discipline in the industry, because of which competitive pressures are very high. Look at the numbers. Profits are down 96%. EBITDA is down by 42%. Yields are down for second consecutive quarter. Now, you know, RASK, which is the revenue per average seat kilometer, is the biggest internal to check the efficiency of an airline. For them, that has fallen for the third consecutive quarter. Now, if you keep giving discounts, keep giving schemes, of course, you're going to face this pressure. You know, the latest discount I just wanted to talk about, Indigo is celebrating its 12th anniversary, and they've called it the biggest sale ever, where what they've done is they're going to offer 12 lakh seats at a discount of 30%. Now, this is after facing 2 quarters of, you know, pain. Yields. So, the competitive pressures are not going anywhere. Okay. And finally, revenues are strong because passenger traffic has been strong.
Okay. Well, there will be a problem for Indigo, but Idea, you can use very weak for them also?
Yes, absolutely, Lata. Very disappointing operational performance. So margins have come in at 11.2% versus expectations of more than 14%. And look at the margin trajectory in the last 4 years. In Q1 of FY16, the margins were close to about 36-37%, and now they've crunched down to only 11%. This time around, there is a profit at the bottom line, so 256 crore. We were expecting a loss, but that's purely on account of an exceptional gain. The company sold its towers to ATC. That bumped up their profitability. If you look at the revenue performance, on a reported basis, down 4%. On an adjusted basis, it's down 2.9%. Again, worse than what peers have done, because Idea had a mild growth, while Vodafone decline was lower. A couple of the other factors, balance sheet is very weak. Its net debt to EBITDA is close to about 19 times, and capex is lower than peers, and also the company lost subscribers to the tune of 6.6 million in the quarter. So on the whole, weak performance by Idea.
Okay, let's get to the brighter spot. Avenue Supermart Mangalam.
Superb numbers, Lata. You know, on a base like that, if your EPS is growing at 43%, there's really no complaints. Across the board, revenue, EBITDA, margins, as well as net profit, they've beat our expectations. 4,560 crores on the top line, close to around 423 crores on the EBITDA, as well as 251 crores on the bottom line is above our expectations. And just for perspective, 27% revenue growth, 39% EBITDA growth, over 100 basis points improvement in margins of a company that prides itself on selling products at the lowest price, and a net profit growth of 43%. Store addition at 2 in this quarter has been conservative, but that's exactly how the company has been in terms of expansion as well. Trades at 72 times FY20. Let's see how it pans out.
Okay, and some more results coming in. Sonal, what were they?
Well, I'll start with GSPL. Strong set of numbers, beat on all parameters. EBITDA, that grew by 19% at 343 crores versus a poll of 304 crores. This was majorly led by increase in the transmission volumes that increased by 7% sequentially and higher than a poll as well. DB expects a 29% CAGR in FY18 to 20 and also expects a volume growth of around 23%. Moving on to Gujarat Gas, strong beat on EBITDA margins came in at 13.6% versus an expectation of 11.9%. That was majorly led led by the price hikes that the company had taken. Even EBITDA per SCM came in at 3.9 rupees versus an expectation of 3.3 rupees. Volumes, they decreased sequentially, but that was on expected line. However, good set of numbers on whole. Oberoi Realty, strong set of numbers again. New sales value, that increased by 1.1 times on a YOY basis. New sales volumes also increased by 1.92 times. Macquarie has an outperformed rating with a target price of 650 rupees. Back to you.
Okay, thanks a lot. HDFC Bank's awaited QIPs here.
Well, Lata, they have launched a QIP of 15,500 crore, and that includes 3,750 crore to the domestic participants and 11,750 crore via the ADR, and that is American Depository Receipt. So this ADR is trading at 12.5% premium to the Indian stock price. So post all the capital raising, that is about 8,500 crore from SDFC Limited and the QIP of 15,500, Tier 1 would increase to 15.9 versus 13.1 in June 2018. Book value can increase by 18% to about 486 per share. Valuation can decline to about 15% and total equity dilution of 4%.
Okay, thanks a lot for that. Well, some more stocks in the news this morning. Anisha is here to tell us more. Anisha?
Thanks, Sonia. I'll start with HECL because that has a positive sentiment in terms of a rating upgrade by ICRA. Moving on to Texrail, that stock was up around 13% yesterday on back of good numbers. In the evening, they announced that they have signed an MOU with a company in Spain, and that makes them the exclusive partners to use that signaling system in India, so that should continue to react positively. Lastly, on solar cells, in a move that can impact the tariffs anywhere between 35 to 50 paise per unit, the government had announced some additional safeguard duties on import of solar cells and modules. Now, though it is a positive for the PV cell makers, a negative for the solar park maker, because remember, almost 80 to 90% of the solar cells used in India are imported, and they form around 50% of the value when it comes to the total project cost of the solar plant. Back to you.
Okay, here's a quick recap then of our top stocks to watch. Stocks with positive news flow: Axis Bank, Tech Mahindra, Avenue Supermarts, Gujarat Gas, GSPL, Oberoi Realty, IDFC Bank, HDFC Bank, HECL, Texrail, Indo Solar, Mozabe, Adani Enterprises and Websol. While stocks that could be under pressure today, Interglobe Aviation definitely. Keep an eye out on the other aviation stocks as well. Idea Cellular, JP Associates, Adani Power, Tata Power and Ujas Energy.
All right, let's revisit the most important stock of the morning. Axis Bank reported a decent performance with only minor complaints. This quarter, here's what the management said about the quarters ahead.
We haven't really seen closures on too many power projects yet. So I think it's a bit early to call that. I think we have to wait for some of the NCLT and resolution processes to go through. I would expect that power, by and large, should have an average recovery rate which is probably better than the other stressed assets. Significant acceleration of NPAs, which was driven by the last February 12th circular, now seems to have noticeably slowed, and we see sectors of stress remain largely the same as before, but the volume of stress is certainly coming down. We haven't seen new areas of stress emerge during the quarter. The asset quality has turned. As you know, we've been hearing it for a long time, but this quarter's numbers do support that. CV sales, passenger vehicle sales, two-wheelers, tractor sales, all of them are pointing to a recovery and sustained demand, especially in the rural segments. Domestic bank credit, which had been very tepid, has improved from 8% in FY17 to 12%. Large corporates are certainly beginning to talk about finalizing capex plans, and we are optimistic that a growth of 12 to 13% on loan growth in corporate should continue. But we also expect retail and services credit demand to remain strong.
Okay, well, let's ask an analyst whether Axis's bad news is sufficiently reflected in the price. Kunal Shah of Edelweiss Financial Services joins us. Kunal, good morning. What are the numbers telling you? Are they better than expected? Is the price at the current? What is your changes in book value and what is your price target?
So it was in line with the expectation. That is what I would say, particularly with respect to asset quality. We were expecting slippages also in the range of 4% run rate, and it's very much over there. And credit cost also in the first half was expected to be somewhere around 250 to 300 odd basis points, post which there would have been a normalization to 150 odd basis points in the second half. So that's so I would say it's in line with the expectation. The only thing has been in terms of the increase in the double B and below book. There have been few downgrades, and that's the reason maybe we believe that even in FY19, because of the slippage from that watch list, plus maybe the coverage required on that, the credit cost could be elevated in FY19. So in terms of the change in the estimates, as the numbers were in line, we are not changing our estimates as such. And we have a target price of 543, which is almost 2 times the FY20 adjusted book.
Okay, so 543 is the target price. Overall, do you think that the corporate cycle is looking much better for Axis Bank now? And are you expecting higher recoveries going ahead?
Yeah, so given the way the entire resolution is happening under the bankruptcy code, NCLT as well, we are expecting a few recoveries to take place in Q2. Plus, maybe outside of that as well, we are seeing some resolutions. So to that extent, the recoveries should kick in as we go through the entire year, and slippages will be much controlled. So I think that's the reason maybe when we look at it in terms of the broader NPL numbers, they should normalize and subside from the current level.
Okay. Well, since we have you with us, yesterday HDFC, the housing company, fell after the numbers. Anything that worried you?
So overall business momentum was in line. The only thing was in terms of the Ind AS transitioning, wherein under the ECL framework they need to disclose stage 1, stage 2 and stage 3. So in stage 3 they have highlighted 1.2% as a GNPL, and over and above that 2.5% as the stressed standard asset. So overall stage 3 was 3.7%, and I think but there was no need for the further provisioning on this. Even after considering 3.7% in stage 3, the overall provisioning requirement was 4,500 crores, while in say they are already carrying 5,000 crores of provisioning as such. So in fact, there was a write back in the net worth of 300 odd crores post tax. So no requirement as such on the provisioning, but I think the only thing was in terms of the stage 3 assets being at 3.7. So I think that was slightly on a higher side.
So the loan growth has picked up across the board, actually, not just for Axis Bank, which has seen retail loan growth of more than 20%. Even Bank of Baroda has seen such a good loan growth this time around. You think that's a trend that could continue? And from the entire lot, what are your top picks now?
So overall, when we look at it in terms of the growth system-wide, we have seen the inch up, and I think maybe outside of the PCA banks, we have seen they getting this benefit of increase in the market share. So even Bank of Baroda being outside of PCA, there we had seen a very strong domestic loan growth, and even most of the private banks besides the retail and SME doing very well for them. In fact, even on the corporate side, we are seeing the uptick, particularly because of the refinancing which is coming under the NCLT. So I think this is more sustainable. We will see maybe most of the banks outside of PCA to benefit out of the overall loan growth.
Okay, well, some of them are still showing disastrous numbers like Central Bank and even IOB, but let's wait and see. Today I think we have Bank of India numbers, so that will be an important one to watch. Kunal Tha, thank you very much for joining us.